morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first global virtual accelerator in the world for startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion in global GDP and 10 million jobs. And in support of this mission, we do a lot of different kinds of activities. These mentoring roundtables are one of our flagship events, and we have done 318 of these roundtables. And Maureen Kelly, whom you've been working with, those of you who have been in the setup phase today, has produced all of them. And you cannot imagine how much complexity is buried behind the scenes to produce all these roundtables with entrepreneurs all over the world, with people's internet connections dropping and, you know, people calling from faraway places and all sorts of configurations. So I want to acknowledge Maureen's immense efforts, and just as we are going through another juggling of the balls. But we are very committed, and we've had the privilege of working with so many of you entrepreneurs in so many different corners of the world for so long, and it has given us a first-hand view of what you all are doing in different corners of the world, and it's really been a fascinating experience of learning what entrepreneurship, what directions, what trends entrepreneurship is taking in various parts of the world. Of course, these days, you know, the trends are converging more and more because of the grand unifying factor of the internet and social media. Nonetheless, there are local trends and local biases that we see in these roundtables, and it's very interesting. The event is being recorded. If you are live tweeting the show today, please use hashtag 1M1M. Join us on Twitter at 1M by 1M or at Stromana. We publish a lot of content and a lot of rich, inspiring, educational content. The 1M1M Roundtable's YouTube channel is where you'll find recordings of all our prior roundtables. It's a great repository of learning material as well, and is completely available for free. These are the call-in instructions. This is a roundtable, so we want your participation as much as possible, but we are not quite ready to take your call-ins quite yet. We will put this slide up back again later on in the show when we are ready for you to call in and participate. We're going to start today's session with a conversation with Rehan Yar Khan, General Partner of Orios Venture Partners. And Rehan has been a very active early investor in the Indian startup ecosystem. Rehan, welcome. It's great to have you here.
Hey, thank you. Thank you very much.
So Rehan, let's start by telling our audience a bit about your fund and your investments in recent years by way of introduction.
Sure. First, I wanted to also congratulate you on all the amazing work that you've been doing. 300 plus roundtables is quite a feat, and I can imagine putting them all together must have been quite a task, right? Each one is a nice event. So great work there, all of you. So coming to us, you know, we are an India-centric venture capital fund. I've been an investor for the last 10 years, and I set up the fund around 3 years ago, along with you know, 2 other colleagues of mine. So we have 3 partners in the fund, and we, for the last 10 years, have been investors largely in India's consumer story, primarily in you know, online consumer businesses. We do a few offline consumer businesses as well, because India is a pretty exciting market for, you know, not just innovations, but white space filling of brands, you know, which is a phenomenon you may not find in the U.S. and in other places, because India, being an underdeveloped country, you know, has fewer brand teams than developed markets do. So we invest primarily in consumer. We do software product investments once in a while, but increasingly we have doubled down on consumer, and we find that we are best suited to add value to consumer businesses post-investment, because we are very good guys with branding, marketing, positioning, ATL, BTL, which is advertising and promotions, and those kind of things. Some of our companies, I mean, I'll start with some of our oldest companies. There's a company which is actually a software product company called Dhruva, which was our first investment, which is a company in the software backup space, relocated to Silicon Valley and has done fairly well over there. I think it's a $500 million company now. 3 years in a row, rated world #1 by Gartner and what it does. Marquee customers like NASA and University of California, Pfizer, etc. Another very well-known company here in India for us is a company called Ola Cabs. We were the first investors in that. Company's done very well. Does 1 million rides a day, goes very fast, has 75% of the market here. The clear leader over Uber in India. We had another company called Jitsi, which was bought by ViewClip, which was a Silicon Valley-based company, and was further bought by PCCW Hong Kong, which and the company has gone on to become the largest streaming mobile channel in China. It delivers streaming video on 2G and 2.5G networks. So it's done extremely well in that regard. We've had other consumer companies here in India. We've invested in a lingerie brand, which is like affordable, fashionable daytime lingerie. We saw a gap in the market, so that's done very well. It's a company called Pretty Secrets. It's a leader in the space. We have a company which is a booking engine. I don't know what the U.S. equivalent is, but maybe like a Ticketmaster, or a Ticketmaster for hair salons. So if you think about it, everybody needs to go to the salon every month, right? Half the population goes many times a month. The other half goes at least once a month, right? Huge industry here in India, $15 billion of spend at salons by consumers in 2014, climbing steadily. The time and motion opportunity of making calls and booking those appointments is pretty high. So easier to just book on phone, using a smartphone. Find your favorite salon, find your favorite stylist, check her kind of slot and book, right? And because you're booking an appointment, you're part of the take rate. So great company in the making. We have we have other marquee companies like PharmEasy, which deliver medicines home. We've got a company which is the Ola for buses, which is again an Indian company, so it's a poor man's Ola. Ola and Uber, of course, are very elite services. You may have a smartphone, but you also need a lot of money to be riding them. So as smartphone prices fall in India, and you're getting low-cost smartphones and low-cost data, the lower sections of society are coming online, so they too want better quality transport and those kind of things. So we've invested in a company which does that. We have a very innovative company here, which is building a low-cost hotel chain by aggregating 1-star and 2-star hotels. It's called Orios Rooms. It's a novel idea. We haven't seen this idea in other parts of the world. It basically organizes a very unorganized sector, which are mom-and-pop hotels and motels at 1-star, 2-star levels, and gives them a brand and standard operating procedures. So these are the typical kind of companies we invest in. Very innovative, very asset light. Are not necessarily only online, but have a massive offline presence and offline distribution. But the key is that they're asset light. They're almost always consumer, and they have a lot of headroom to grow. Right. So that's our model for investing.
Can you, based on what you're doing in terms of stuff that you have invested in already and what you see. I'm sure, in selecting, let's say, 5 investments, you probably see 50 other consumer investments. What are some of the salient trends that you see in consumer concepts or consumer businesses that are coming on and that are actually scaling in the Indian market?
There's just a lot which is scaling in India. India is an underdeveloped country. There's white space in almost everything. In the United States, you guys, need to produce crazy products like, it takes somebody's picture and it disappears in 60 seconds to create a billion-dollar company. In India, we have to do food, we have to do hotels, we have to do buses. It's a lot simpler over here because we're an underdeveloped country, right? So there's opportunity in many verticals here in India. I wouldn't do justice if I just named some. Everything from banking. India is extremely underbanked. There are only 35 million people in India which have, the equivalent of a FICO score, which is what we call a CIBIL score here in India. There are only 5 million active credit cards in India. Hardly anyone has taken a loan from a 1.3 billion population. Very few people have bank accounts. So, banking, right, extremely underbanked. If I come to another vertical like media consumption, though, everybody hears about India's massive Bollywood industry, only 2% of people in India have access to Bollywood, right? The rest of the people don't even watch movies in India. They have no access, right? And they say Bollywood produces, the Indian movie industry produces more movies a year than Hollywood, right? And yet only 2% of the population watches movies in India. So media is another tremendous area. If you look at apparel, I mean, you can name any sector, right? Kids, apparel, transportation.
In the context of this, grand underdeveloped opportunity, portfolio that India presents, help us understand how you view that from a venture investment standpoint, because, underdeveloped also presents kind of slow growth markets. So venture typically demands extraordinarily high growth. How do you reconcile these two phenomena?
It has to be asset light, right? So I think the key in venture is not tech, right? I think tech is hygiene. Just having a lamp stack doesn't make you tech. I think the key that venture capital requires is it needs to be asset light. And that's what actually gives you scale. If I'm going to open shops and those kind of things, that slows me down. But if I'm going to leverage a chain of shops which is already out there and I'm going to distribute my product via that, then that doesn't slow me down, right? Or if I'm going to leverage smartphone distribution, that I get my app on a lot of smartphones and people use that doesn't slow me down. So the characteristics that you guys in the U.S. have believed are, you have to differentiate the U.S. from India. There are limited opportunities for venture quality investments in the offline world simply because it's highly developed, right? It's not because you could launch a product that won't have the characteristics of venture growth. It's just that opportunities are limited in there. Right, so in the U.S. and possibly in Europe, most of the venture investing has concentrated on distribution via smartphones, right, and those kind of things, or the internet. Prior to smartphones, it was computers. In India, that is not the case. In India, because it's so underdeveloped, you can produce brands, right, which are even offline distribution or online distribution for that matter. And they both have similar characteristics of nonlinear or extremely rapid growth that can give you venture plus returns.
So how do you analyze Flipkart in that context? Because Flipkart has gone on to build this whole distribution and logistics infrastructure, which is not asset light at all.
Yeah, so Flipkart is not as asset heavy as building a chain of stores, right? So it's not maybe as super asset light as let's say Snapdeal, which is a pure marketplace in India. It does have some it has back-end warehouses, etc. But the entire front end is absent. So if I was going to make a chart, I would still place it in the in the quad of asset light. Maybe a little bit more towards the middle, but more in that quad.
So you think the assets light versus asset heavy in your definition is whether you need physical infrastructure or not, if I'm hearing you correctly, in terms of building stores or having storefronts. That's your notion of asset heavy.
I think front end. I think you said that right. I think front end and production, right? So if you have to manufacture products, so I think there are two things which would come into asset heavy. One would be storefronts, and the second would be manufacturing, right? If you are not doing those two things, I think you're asset light.
So that's,
right. So if you look at
saying that
if you look at Meru cabs in India and Ola cabs in Uber, the difference with Meru was that all the three companies saw the same opportunity. And what is that opportunity in India? That there are 20 to 30 million Indians that need to take cab rides a day. That's a 90 million to 100 million cab rides a day market. And because of the extreme paucity of public infrastructure and just as growing society, there's a massive market out there. Meru's approach in India was, hey, I'll go and buy 1,000 cabs. Ola, Uber's approach has been, there are already 1 million tourist vehicles in India or, licensed kind of cabs in India. Why don't you just aggregate those? So, same market, but asset light is the difference. I wouldn't say it's the tech which is the difference, right? Just distributing and calling the cab via smartphone. I can call a Meru via smartphone, right? Meru is also running good analytics in the back end to deliver their cabs at different places. But the difference is the asset light model, and that's what makes it venture class, because it takes that little bit of money that you put in and to produce a much larger result. So I can use my money to fund negative EBIT versus having to use that money to fund asset.
Yeah. So what you are saying is that in India there is a lot of assets that are already in deployment, but in unorganized sectors, whether it's hotels or cabs or stores or all kinds of things. And you believe, at least it seems like one of your investment thesis is to bring those together under one brand, put marketing around it, put the technology-enabled infrastructure around it, and put the operational infrastructure around it to streamline it, and then you have interesting consumer businesses that can scale nicely.
That's right. Kind of reverse franchising.
Yeah. Okay. So now, please analyze the Indian version of the unicorn mania we are seeing actually all over the world right now. How do you read that? How is that playing out from your point of view in India?
Well, I'll tell you what happened in India. Sorry, I seem to have lost my PC connection. What happened in India was post Alibaba's IPO. I don't know if this is what happened in the US, but post Alibaba's IPO in September 2014, there was a tremendous frenzy of capital that rushed into India, maybe looking for the next Alibaba, possibly, right? So the quarters, the last quarter of 2014 and the first two quarters of 2015 were extremely heavy in terms of capital flowing into India from non-resident funds in India, right? So not the resident VC industry, but hedge funds from the US or other such places. What we call suitcase VCs would fly in and park themselves at an airport hotel and come and make a few deals and write big checks and kind of go off, right? That created few premature unicorns. So I don't know if they are not real unicorns, but some of them definitely got there prematurely. Maybe they should have got there another 3-4 quarters later or 6 quarters later, but they got there, they all got there in 2015, right? that has definitely died out. I think some of those guys which got there prematurely now are dealing with a problem of, hey, how do I raise money again at this valuation? But that's fine, right? I think in India, considering how young we were as a venture industry, and maybe also for you guys in the US, I think you need these bursts. I think you need this momentum from time to time to get things going. I think you need this euphoria, right? It pulls in more.
Yeah, it has created tremendous publicity for entrepreneurship in India,
absolutely,
which was a good thing.
Absolutely, absolutely. The Prime Minister was on stage, and they announced this $1.5 billion local fund, fund of funds. A lot of angel investors jumped into the fray. Some of the resident VC funds ran around all over the world and raised a lot of money from LPs. So I think it was a good thing. A lot of entrepreneurs got into it. Corporates started looking at the sector seriously. So I think it was a good thing that happened.
Now, after all the dust settling around this unicorn mania and rationality returning to the market, when you look at consumer tech, consumer technology-enabled services, let's kind of categorize it this way. What are some of the best companies in India that have rational valuations, can sustain over the long time and deliver really strong companies with proper exits and everything?
So I think Book My Show, possibly, right? Because he's a leader in this. Book My Show is a leader in the space. They have money from 3 revenue streams. They monetize the take or the booking fee of movie tickets. They charge the movie halls for software, and they charge a convenience fee to consumers. And they seem to be a clear leader in the space. Fantastic entrepreneur. Super asset-light business. It's all in the cloud, right? You don't have to deliver food or run cabs or anything like that. You just have to kind of create this company in the cloud. So I think great business, extremely monetizable, very profitable. So clearly a great business. I think Zomato. Now that Zomato is kind of redoing themselves, right?
I don't believe in Zomato at all. From a valuation point of view, business model point of view, I think this company has gotten far ahead of itself.
Fair enough. We'll agree to disagree on that. I'm not going to convince you that, hey, my thesis is correct. But that's what I believe, because see, food is a large subject matter, and I believe Zomato has brand space, right? It's got mind share. It's my go-to place for food. Now it's a question of how effectively they turn on various monetization levers. I think as far as food goes, they're clearly the #1 brand in this space. There's just no two ways about that.
But the business model is the problem, right? If you look at the equivalent business models like Yelp, these are not good business models.
So I don't think Yelp is a leading brand in I don't know much about Yelp, but I don't know if it's a leading brand.
Yelp is absolutely the leading brand in America as far as restaurants is concerned.
But I think for reviews, right?
Yes.
User reviews.
Yeah.
Not for like ordering food, and not the be-all and end-all of food, right? It's not like the #1 authority on food.
So how do you explain the Zomato business model which you think is going to scale?
Well, first of all, if you go with my assumption that Zomato is this be-all, end-all brand in food, right? Which is what we believe at the firm, that it definitely occupies premium mindshare when it comes to food. Then from that you can develop several monetization levers. Some of them get switched on. The older ones were like Yelp, where you monetize listing. Newer ones are like food order, where they take a commission on every order. I think very soon they will come up with some very interesting models where they will actually start monetizing your bill at the restaurant. Now that, of course, is the big one, right? So I book at the restaurant.
Yeah.
Hello?
Mm-hmm. Yeah, go ahead.
So monetizing your bill at the restaurant, I think, is the big one. And I think there are several innovations that we will see from, Zomato, which will allow them to monetize the bill at the restaurant.
What they do in the future remains to be seen, but currently the business that they've built, I think their valuation is way off kilter as far as current business, current monetization levels are concerned.
Absolutely, we don't disagree on that. That was the 2015 halo effect, right? We don't disagree on that. Valuation is probably ahead of where it should be, right?
Yeah.
Maybe by 30%, 40%, 50%. It could be any number. But we think it's a clear leader in the space, and given time, it can become a very valuable company.
How do you read Flipkart?
In a tough space, because for all faults of their own, right? We don't think Flipkart is a great brand. Flipkart sells on price. They stand for price. Anything that stands for price and price alone is a commodity. It's not a brand, right? And they failed to become a brand. Amazon is a brand. Amazon is Earth's largest store. It stands for range. I think somebody tweeted today morning, the information tweeted today morning, Jessica tweeted today morning, hey, I'm surprised prices on Amazon are higher than Walmart. Really? Are you surprised? They never stood for price. They never said we stand for price. They always said we stand for range. And they've got you hooked onto that. You go there, you get anything you want, so you don't check other stores. Right? You're just hooked on.
Amazon did position on price. For a long time, Amazon did position on price, and still they position on price, but not only price. The customer service that Amazon is delivering is unbelievable. You order a $2 merchandise on Amazon, and they deliver it for free as part of Amazon Prime. And that is a level of service that is, I don't even know how it works, how they make that profitable, how they do that profitably, but it's unbelievable level of service.
I mean, correct me if I'm wrong, but they never had the tagline Earth's cheapest store. They always had Earth's largest store. So
no, but they
like
did.
A range-based positioning.
They routinely offered the best prices. Also, when Amazon came into the market, they didn't have Prime. For instance, Prime was a much later invention. When they came into the market in the beginning, they were positioning on price. And they weren't positioning on range either. At that time, it was books and CDs and stuff like that. So it was a price. They entered the market through price and then moved up the value chain. So maybe that's what Flipkart was trying to do. But
this is what Flipkart hasn't done. They haven't been able to move away from price. That's the issue there.
Well, and Flipkart is also going to have to compete with Amazon, which is really good at doing what they do. Really good.
Yeah, I'm less concerned about the back end. I'm less concerned about the back end. I think I'm more concerned about their brand positioning and the experience they deliver. I mean, I went to buy a pair of shoes the other day. I buy ASIC shoes, so my shoes, in the monsoon in India, they took a beating. So I went to Flipkart. They were for 7,500 rupees. Right, and for next day delivery, they either wanted me to join Prime, which is new in India, or I had to pay 100 rupees extra, or it was free delivery 2 to 4 days. I go to Flipkart, the same shoes are 6,500 rupees, and next day is free delivery. Right? Now, this clearly shows Flipkart are not consumer guys, because if they were consumer guys, they would have charged me for next day delivery and sold me something to make it free. Right? That's the difference between a company that really understands consumer psychology and a company which is great at the back end and very functional. Right.
Well, your point is well taken, but I think what Amazon is doing, at least in the US, and I imagine that they will do it around the world, the level of service that they're providing plays very well to consumer psychology. I mean, these days,
Sure.
I first look for, if I have to buy something online, I first look at Amazon because just the level of delivery time and service, and it's all covered by my Amazon Prime, they have got me. Consumer psychology-wise, they've got me, and they've got most consumers.
Exactly.
Here.
Absolutely.
So, and that, however, to deliver that kind of level of service and that to have that lock on consumer psychology, you've got to get your back end right. Otherwise, you're not going to be able to deliver that. And that's not a simple back end. That's an extraordinarily complex back end.
So my point was that actually Flipkart is pretty similar in India, at least in standards of delivery. To Amazon, but they don't sell that well.
They don't sell that well.
Yeah, they don't sell. They don't sell that. They don't sell that well. They go on talking about price.
Interesting.
Right? And that's where you kind of move away from not being a brand.
Any other comments before we move to the mentoring segment of the show today? Any other parting thoughts?
On Indian unicorns or something else?
Indian startups in general, where you're looking for opportunities. For instance, are there segments or opportunities that you've seen that where you would like to see companies?
So we think I'll talk about an unusual segment. Non-tech is a great opportunity in India, and I think a lot of entrepreneurs miss that because there's just so much influence coming from global media and global role models, which are all these tech startups, and they become really big, that I think a lot of entrepreneurs in India are missing out on the non-tech opportunity in India, like FMCG, skincare, those kind of products. And I think there are billion-dollar companies in India to be built in that. So entrepreneurs, if you're listening, please do look at non-tech stuff as well in the Indian context.
All right. Well, thanks, Rehan. That was a very interesting discussion and a great window into your thought process on how the consumer economy in India, startup economy in India is shaping up. Yeah. Thanks for coming.
Thank you. Thank you. Bye-bye.
Folks, we're going to switch to the mentoring portion of the conversation today. Before you start your pitches, I want to set some expectations. This is a working session, okay? This is not Shark Tank. We're not here to gratuitously offend you or insult you to entertain a few million viewers. This is purely structured to be a safe place where you can come and work, and we'll give you input with which you can, hopefully accelerate your process a bit. You can clarify issues, challenges that you're dealing with, and so forth. It's very possible that you will disagree with the feedback you get here, and that's fine. It's your company. You decide what you want to do. One caveat, not all businesses can raise money. Not all businesses should raise money, and raising money does not guarantee success. So please do not be obsessed with raising money. And if you're not pitching today, please participate by asking questions in the public chat, and I'll also open up the line for you to participate through the phone in a little bit later. You will learn the most by asking questions and participating. So definitely take advantage of the fact that this is a roundtable, not a broadcast. We're going to start with Sanjay Kukreja. Sanjay, please unmute your line and tell us what you're working on. Sanjay?
Hi, good morning, Sabina. Can you hear me?
Good morning.
All right.
Go ahead.
So thank you very much for the opportunity. Thank you very much for the opportunity to discuss my plan here. And I look forward to your inputs on the overall proposition that I am going to present and get some idea on risk involved and what is your suggestion to take some mitigation steps around that. And based on your feedback, I would like to refine the plan further and go to the next steps. So let me first start with a brief about my background. I am 19 years into the industry, and I had been into the supply chain, advanced supply chain analytics, business consulting, manufacturing, software implementation in the past 19 years. And recently, a couple of months back, I moved out of the job and started doing things on my own. So I started with a small business as a first step, which is around the IT staffing. And this is with one of my partners. And the proposition, the plan that I'm going to share today is in connection to that. So it's in the same area. Let me quickly, now you have moved to the next slide. So let me talk about what is this plan about. So this is about the Flexi-staffing. And, you know, Flexi-staffing is not new at all. It's in India, there is a huge workforce who is working on Flexi-staffing in government sector, organized and non-organized sectors. And but what I want to present here is some facts around the growth in the Flexi-staffing. So as per some of the public domain article from Indian staffing organization and some other organizations, by 2025, there's a huge increase in the Flexi-staffing needs in the country. And so right now there are around 1.7 million temporary resources which are forecasted to be increased to 9 million in 10 years. And the companies like IBM and many other IT staffing companies are spending huge money in the contract staffing in India, which is by directly doing contract staffing or through their third-party staffing partners. So this is around the opportunity that is around there in terms of the contract staffing and the flexi staffing.
Okay.
Can you please move to the next slide? Now, what are the gaps in the contract staffing ecosystem when it comes to India? So India contract staffing or flexi staffing is not as mature or not mature as in the other countries like US and Europe, where contract staffing is also a very good option if you compare it with permanent jobs or full-time jobs. In India, there are definitely challenges in finding out the people who are really aspire for the contract staffing. Though in the IT software area, there is a huge need. Professionals are not confident in opting for the contract jobs because of various reasons, compensation, the job security, career path, they don't see the career progression with the contract jobs. And also the overall market is not visible to the people, to the professionals, to the companies, because there is no real platform which says that, okay, there is a trend there and contract jobs are at par with the permanent jobs. So I heard someone saying when I was doing market validation that contract jobs are probably super jobs, so the second level of job, and people don't want to opt for it because they are not sure about the compensation, they are not sure about many other things when it comes to that. Can you please move on to the next slide? When it comes to the overall proposition, the idea is to address this gap and see how we can bring or build an ecosystem where we can bring professionals who are ready or who can adopt to the contract jobs, flexi jobs, than what they are now, because there is a fear around contract jobs, though the compensation are probably more, but the market is not lucrative at all. Professionals should see a good career with that in India, and they should be able to value the jobs that they are getting. So it's about a platform where it's not a new idea. I mean, probably there are other companies in the US who are doing it. In India, probably there are not too many companies, or not there are one or two companies only who are really doing a job, though there are a lot of third party who are manually connecting the people with the IT companies. So it's about a platform where people can be selected with the right skill set, and they really see, okay, what are the benefits that are with the job. Right now, the benefits are hidden. They are on somebody else's payroll, who will pay them, how will they be paid. So all of these things are not very clear. So making an ecosystem which is much clearer than what is there, and then people should also see there are a lot of opportunity which are going to come in this area. Moving on to the next slide. So we are at a very initial stages. So I just put the name of my business plan. My organization is Nicheworkers. So the platform which addresses the growing needs of the flexi-staffing in India, and I'm targeting it for the IT industry right now, not for any other industry. It will showcase the potential of the contract staffing and build the confidence and security among the professionals and help them adopt the contract jobs. And why? Because there are salaries in India are increasing. There are a lot of niche skills which are coming up. Like SAP is one area where, like, most of the companies opt for the contract position rather than permanent because there are smaller projects that they want to hire a person for. So it's around giving that visibility and clearly showing the benefits around that area. We can move on to the next slide. Savannah, do you have any comments at this stage?
No, keep going.
Okay. So I did some analysis on the TAM and what is the market segment, and I would like your feedback on that. So what I'm looking at is the contract needs in the IT companies at this stage. And when it comes to IT companies, there's already a chain, different layers through which IT companies are hiring. So I have this data from Indian Staffing Federation where they say that the Indian staffing market is close to $4 billion when it comes to formal or organized sector. And out of that, 2.97 billion is being paid in revenue within this area. So either staffing partners are paying or the companies are paying. So this is the revenue amount which goes through the different staffing partners like Adecco, Teamleads. There are like many different companies, Randstad, who are hiring huge number of people on their payroll and serving for the IT staffing company. There are many, many companies around that. So it's a big market. And when it comes to the market side of just the IT sector, it's close to 1 billion, 1.125 billion. So I took that, and this is in terms of the staffing payout. This is not the, for example, if it is a consulting organization, IT service IT staffing company, it's not about the like 10% or 15% that they charge on the placement of a person. It's not that amount. It's the amount that the company is actually disbursing to the employees through different channels. So if a person has a salary of, say, 20 lakhs in India, then this amount includes that salary piece plus their profits. So if I see, okay, this huge market around it, and if I can tap in some portion of it where the transaction either flows to the platform or I can serve the companies to hire that much volume through the platform, it might come close to, if I consider 4% of the IT contract market, might be 45 million. And we have seen in the fact that there is like at least 5 times growth in the 10 years.
Let me see if I understood what you're trying to do here correctly. You want to create some sort of a marketplace of sorts, whereby individual IT contractors can connect with employers and get placed, not through these staffing firms. It seems like bulk of the market in India, as far as temporary contracts, temporary workers, goes through these large staffing firms who hire people on their payroll and then place on projects. And you're saying that you want to bypass those and you want to create an alternate, you want to cut those out of the process, and you want to create a direct marketplace connecting people with employers.
Yes.
Is that what you're saying?
So, yes. So creating a marketplace is definitely an idea, but beyond that, right now, what happens is all these staffing companies, who are very big staffing companies, also have a second layer of partners who work for them. The first challenge is finding out the right people. Second is they charge very different rates. So they charge it on case-by-case basis. Some will be like 200% of the actual value of a person is charged by a organization. So what this marketplace can do is that it can even supply to those partners, but it can control the charges to a certain rate. So rather than just having 200% or 100% margin in a certain case, it can help pass on the right benefits to the candidate itself. So if they can see, okay, what can be the pre-contract benefits, if they can get some travel benefits, or they can state benefits after the job is over, can they get 1 month extension or 1 month salary also, because so that they can find another job contract. So it will, my idea is that some of these things, forcing these companies to create some of these possibilities where rather than just paying for the money around, they can pass on the right benefits to the contract people, professionals, so that they have like right way to see, okay, there's a lucrative market around it, and it can also help companies, big IT companies, to cut down on their costs. Rather than paying double or triple, they can pay some premium on 25, 30, 50%. And have the right visibility with their partners.
Sanjay, just 1 second. So a bunch of people are sending me private messages in the chat. Please don't send me private messages. I have to work with the entrepreneurs right now. I don't have time to either solve your technical problems or answer to you privately. Please write your questions in the public chat sent to all participants. And if you have a technical question, Maureen will answer. If you have other kinds of questions, Maureen will answer. But right now, I do not have the time to answer to your private questions, okay? Go ahead, Sanjay.
Okay. So very quickly, I know we're running out of time here. So go-to-market strategy is to talk to some of the 5 to 10 prominent companies. I have already talked to 2 or 3 companies who are doing major contract staffing, and see if they like this idea, that if they can get a reliable source of getting the contract staff, would they opt for it? Would they be open to place their jobs for us? Would they be open to hire through a network who will get onto our platform, where some charges will be, they will be cut down on the charges, but it will, because it will be a marketplace, then more people, more professionals will be on that. So easiness will be there in finding out the people. So I found positive response from the company, at least from these 2, 3 companies. So there are other points that through social media, I can publicize this further if I start getting jobs from like just a few companies and then build on that. And I also talk to some of the contract people about their issues, concerns, problems, so I can even approach them directly, personally, to have them start uploading it and then build network slowly through that. And I know that there are other mediums, publish articles, bloggers, and other things will be there, but all of that requires money. So I'm not right now thinking about asking for an investment. It will be mostly bootstrapping.
Hey Sanjay, this is Akshay, and I have a question.
As you know, I'm sure that this is not ready for investment, so you will have to bootstrap. So I think you need to find the most efficient way of bootstrapping this into some sort of a validation. And is it through individual people that you would be able to get to that validation? Is it through small staffing firms? You need to figure that out by testing those assumptions. How can you rapidly get into revenue and validation?
Okay, sure.
And I think the piece that I'm seeing missing here, I know you're going after individual contract people, but maybe some number of small staffing firms, not the large staffing firms, they have their own relationships, but if there are small staffing firms that you can connect with and bring onto your platform, if you can bring 100 smaller staffing firms, that may be a faster way to validate this. If you can get, 20 employers and 100 small staffing firms, that may be a faster way to get this working. Because remember one thing,
sure.
In India, people look for jobs, people look for a steady employment typically. And there is a large number of people who make their living off Upwork, which is the merged version of Elance and Odesk. So that's a whole different category of people. But I think my hunch, and you have to validate this, my hunch is in India, people who are contracting for Indian companies are going through staffing firms who are putting them on payroll and not going directly to freelance. And that's the fallacy I see in your assumptions, is that you're trying to go directly to individual contractors, and it's not clear to me that there's a lot of individual contractors who are interested in working for these Indian IT firms. I think they typically work through staffing firms.
Yeah, what I was talking to is some of the staffing firms itself.
Yeah.
And you are right. I mean, this whole model, it's very different than freelance, because a lot of these IT companies expect the person to be on floor and working directly with the teams. So there you see a very clear differentiation between a freelancing model and this one. And even if, like, you ask companies, are you ready to give them work from home option? They are not ready. They want people to sit in their office and work. But you're absolutely right. I think reaching out to the small staffing firm and the middle layer of the staffing companies would be the right step to validate this further.
Mid-layer IT companies and the small staffing firms, that's where I would position this.
Okay, sure. That makes sense.
Okay.
And so my plan is to build a prototype model, and then revenue model there will be licensing fees as the user base increases, and also job posting. And there's one other, the last point, if you see, hire professional on our payroll for IT companies with standard margins, not charging them. So bring visibility into how much we are charging. So if the person at 10 lakhs, like what I'm charging, many times.
But then you're kind of becoming like any other staffing firm. Then you're not working on a marketplace model anymore, and you're going to have very high overhead, and your working capital needs are going to be substantially different. If you have to put all these people on your payroll, you're going to have huge working capital issues, and you're going to be competing with your customer base. So I wouldn't do that. I think it's kind of, then the onus is going to be for you to generate jobs for your people over other people that will corrupt the marketplace, etc. And I don't think, if you want to be a marketplace, don't become a staffing firm.
Okay. Okay. I agree with you.
Okay.
That makes sense.
All right.
So the last slide, questions, feedback. Okay, so how do you...
I've already given you questions and feedback.
Okay. Do you see that the idea has potential to Indian market?
You need to validate that. I don't validate people's ideas. I'm not the customer. You need to, the only validation that matters is what customers have to say. And in your case, if you're a two-sided marketplace, you need both sides of the marketplace to adopt this concept. So you're going to need to validate both sides of the market and see if it works.
Okay. Good. Thank you very much.
Good luck. You're very welcome.
Thank you.
Tanuja Phadke is next from Oakland, California. Go for it.
Can you hear?
Yes, go ahead.
My name is Tanuja. I've been working as a software engineer for the last 13 years. And based on the way people work in the software industry, I realized that we need to change the way people work. So I came up with this idea that we need to provide a portal that will provide a service that will help build a mentally healthy, collaborative, and gender-neutral workplace. So what are the current problems that people face? So there are multiple issues that people face at workplace which prevents their growth. And women face additional issues. They don't get proper mentorship, and they don't know how to navigate through situations. So how can we do what can we do to help the employees succeed? So I explored some of the current solutions, like we have HR and ethics committees, but they are not transparent. They have a zero open door policies. Managers, many times they don't have time. Their priorities are different. There are career counselors, but they do not understand specific company needs. The HR is not transparent, and there is no way to find out what process an employee has to go through if he raises an issue, what's the consequences of speaking up and asking for change. Next slide. So this is how I plan to build a portal wherein people can go and seek help. They can choose to be a mentor, or they can seek mentorship, or they can have something like how do they cope with a specific situation, so they can share their cases. There will be special like a tab for managers where they can share if they have handled any issues, how they have handled it, what changes would they want. Then I have something for women, and there are educational videos, and I also have how to build a company culture, which is nurturing culture, and what are some of the strategies which people can work with the involvement of HR so that the company culture is more productive and more constructive. Next slide. So these are the list of problems that my website, my portal would solve. So first one is it will establish a process and incentive to enforce your organization's core values. So they are functional core values, not just on paper. Share interpersonal challenges in a safe manner. Get help from expert mentors. Create a gender-neutral culture where women can thrive. Develop wise judgment skill in your managers, and create a constructive and collaborative work culture. Next slide. So what are the market opportunities? I see the business space is HR, or it can be individual users, or it can be corporate. Next. And these are some of the competitors, people which are already doing something similar.
Tanuja, you should never put a slide like that on a presentation. Is this tell me, is this a slide that you should be putting on a presentation? What is this?
So this is some of the other companies which are in the same domain.
Yeah, but how, I mean, you don't know how to do a slide presentation. You put a link, a URL, which means nothing to anybody who is looking at it. What kind of a slide is this? You have multiple slides that are basically rambling URLs. How does that say? Does that say anything? Does that mean anything to anybody who is looking at these slides? Anyway, how are you going to make money of this? What is your business model?
To charge per customer, like a subscription.
And are these mentors on your payroll? How are the mentors being brought in? Are the mentors working for free? Are they being paid? What is the incentive for mentors to be part of this?
They will be paid by the individual customers who subscribe.
So you want to bring on mentors and potential mentees, and you want to charge them, take a commission of the payment that mentees make to mentors. That's what your business model is. It's a commission business model.
Right.
So, you know, you can try it. There are some issues with mentoring networks. It's, you know, mentoring networks has not been a business model that has worked very well in most cases. But it depends on what your ambition is. If your ambition is to build a small business, maybe it will work. If your ambition is to build a very scalable business, it probably will not work.
Mm-hmm.
This concept has been tried quite a lot. So that's my observation about all the experiments that I've seen, is that I think it is not a scalable concept, but at a small scale it may work.
Mm-hmm.
And you need to figure out exactly how you're going to be going to the market. So, business, I mean, what is it? Who is the customer? How HR is not your customer. This HR has nothing to do with this. You're basically bypassing HR and creating an alternate model for people, individual employees, to go to mentors and get input. So you have to recruit the mentors one way, in a consumer marketing mode. You have to recruit the mentees, your customers, who are going to be paying from a consumer marketing point of view.
Right. So there can be like two ways. One is where people can independently register as mentors, or if organizations are interested, they can use the software and have mentors from their own organization.
Have you checked that? Have you validated that assumption?
I have to validate that. But I did
so
talk to a few small companies.
Whatever assumptions you make, you need to validate those assumptions, because otherwise we don't know, right, whether you need to, if your assumption is that HR is going to, you know, come bring their employees onto your platform and are going to bring mentors onto your platform and so forth, then you're going to need to validate that assumption. You're going to need to talk to 100 companies, HR departments of 100 companies, and get input on how do they view, because you're now trying to kind of, you know, you're creating a revenue opportunity for people inside that organization. You're taking commission of that revenue. You're trying to get people inside that organization to pay, and it's kind of a funny thing for an HR to be part of. Maybe what you will hear if you go to talk to HR people is that, okay, we will use your software, we'll pay you for facilitating the software, but we want a closed door, white labeled platform that we are going to pay for, and the mentors and the mentees don't have to pay for it, and that completely changes your business and your business model. And that may be actually a better business for you to be in.
Mm-hmm. Yeah.
You see what I'm saying? If you build the software and you white label the software to, you know, 100, 500 HR departments, and they basically pay you some sort of a subscription fee, and you sell it as a software as a service, that may be a much better business for you.
Mm-hmm. Yeah, so I have basically two options: software as a service, or people having come to the platform.
Yeah. Software as a service will be an easier business to build. The consumer business, consumer marketplace business is not a great model. Mentoring networks in a consumer marketplace model is not a great business. People tend not to want to pay.
Okay.
Okay. So I would definitely go try to validate the software as a service business catering to HR departments.
Okay.
All right. Now you do need to learn how to do a slide presentation and clean up your slides and start looking a lot more professional. That's something that I would strongly urge you to do.
Yeah, I'll work on that. Thank you.
All right, great. Okay, folks, if you like what we are doing here, please refer serious entrepreneurs into 1M1M. We are looking for entrepreneurs who have the tenacity and the mental set to want to build businesses over a long period of time, because it takes a long time to build, successful businesses. I'm going to spend a few minutes explaining to you how to use 1M1M, and then we'll open up the line for further Q&A. So everything we offer is at 1mby1m.com. You'll find tons of material there. You'll find a blog that is free and is very, very rich with inspirational and educational as well as informational content. Just by following the blog, you'll learn a lot and you'll stay on top of technology trends and so forth. You can also learn entrepreneurship methodology, the way we operate, the way we think and teach through the Entrepreneur Journeys book series. All the books, there are 12 volumes, all of them are case study based. There are 12 to 16 case studies in each case, and they double click down on a particular topic. All of them are available on Amazon Kindle. Then we have a whole lot of information on the site that are videos, video FAQs, etc. You're welcome to dig around on the website for, to find answers to your questions. This is our 319th free mentoring roundtable. There have been over 50,000 people who have attended these sessions from all over the world. And you are welcome to come back and pitch at one of these sessions any Thursday. All through September we have roundtables. And actually all through October we have roundtables. So there's tons and tons of roundtables coming up. Just book your slot on the website and Maureen will get in touch with you with further instructions. If you want the more comprehensive acceleration program from 1M1M, that's our 1M1M Premium program. We offer you extensive methodology guidance, a full video lectures and case study-based curriculum. We help you with business development. We help you with strategy consulting on your project. We also help you with financing if you are fundable, and then media relations and just getting the word out in the media and social media, etc., through our cloud and our presence, our community. That is a $1,000 annual membership fee program. You will find examples and cases of those in the $1 Million Club link on the website. Quantifying the 1M1M value equation is an analysis of the ROI of the 1M1M program. We offer you $375,000 plus 5 to 10% equity worth of value for just $1,000 annual membership fee. There is no notion of graduation. You can be in the program for as long as you need to, as long as you think you're getting value from the program. We are happy to work with you. We have companies that range from zero stage or pre-zero stage all the way to millions of dollars in revenues. So we have expertise and methodology to shepherd you through quite a lot of the early stage business development. Now, the 1M1M self-assessment is a tool that we want you to use and think of yourselves as your most important investor. These are questions that investors would ask you, but you are an investor in your business. You're signing off a number of years of your life to do this business. You should be thinking about your business as an investor would and ask these questions about your business and see if you can find answers, credible answers, convincing answers. Now, there is another offering in the program so that you can get in to the program at a reasonable price point, at a even more reasonable price point. This is yet another offering in our effort to democratize entrepreneurship education and acceleration. 1M1M Basic is our $99 a month curriculum-only membership program. So you can also, if you're not ready for premium, you can get in to 1M1M Basic. And that would also get you way ahead in terms of learning methodology. That's pretty much it. There's a lot of information on the website. All your questions probably can be answered through the website. The curriculum is based on over 700 successful entrepreneurs and their journeys, their case studies, and you learn a lot through other people's experiences. You don't have to make mistakes yourself. You can learn a lot of strategy, a lot of methodology just by following these case studies in context of specific issues that you will be facing. Our methodology is lean, capital efficient, bootstrap startups. Even if you raise money, you're going to have to bootstrap first and raise money later. And we're okay if you don't ever raise money, that's fine too. A lot of companies will need to bootstrap. Not all companies are fundable. That's pretty much it. So this is our September Roundtable roster, pretty much every Thursday, 8 a.m. Pacific time. And we can go to your questions at this point. These are the call-in instructions. So if you want to ask questions, just let us know in public chat that you're calling in, and then we will call you. While you're figuring that out, let me introduce you to Irina Patterson. Irina is your contact for questions about the 1M1M program. You can email Irina anytime, and she will be happy to answer any of your questions. Anybody, questions? You can also type in your questions in public chat. Anybody, questions, comments, issues, feedback? No? Very shy group today? You can't be shy if you're going to be an entrepreneur. No questions? Really? Okay, well then, we're going to adjourn for today. Thank you for coming. I hope you enjoyed the session, and hopefully some of you are going to come back and present at the next session or one of the upcoming sessions. Talk to you soon, and we look forward to working with you further. Bye-bye.